Hey everyone, it's Robert Keens with goldsilverpros.com. It's been a couple of weeks since I've really looked at the silver's futures market and the silver's price. So I wanted to come back today and give you an update. Actually intended to do this Sunday night and I recorded a video, but didn't get it posted on time. And since the data's changed, we're just going to redo this video with the new data. So here we're looking at the chart of silver that I showed you a couple of weeks ago. And I believe that was somewhere in this time frame when silver was about $19. And I predicted, based upon some of the market trading and the derivatives, the COMEX market and the SLV, that we would have a rise in the price of silver. And as you can see, my call was correct. And we bounced up quite a bit. And we kind of reached a peak. We've been sideways trading for a day or two here. I'm going to explain why that is the case. Trading is a very psychological thing. With people on the markets, they'll trade up into a certain point, but if they meet a previous significant point on the price graph, a lot of times they'll stop buying, they'll stop selling, they just won't participate, or they won't continue further. It's just, markets are really psychological. So whenever we're looking at a chart of something, we call this technical analysis. I would actually call it market psychology analysis, because that's really what it is. Because we're people and we trade based on patterns, and once we notice patterns, that's kind of influences how we go about things. So it's interesting to see where silver is and has been sort of sideways trading the last couple of days. I drew some chart lines here, just looking at previous peaks or troughs, and you notice we have one here at $22 from back in October 14. We have one about $24 back from August 14. We have one at $32 from back in October 13, and we have one about $34, $35 from also back in October when the silver price had begun to fall. And when you see these significant peaks kind of hold for a while and then drop off, or a trough that holds for a while and rises, these become either support or resistance lines in the progression of the price, depending on which way you're moving. Now let's kind of blow this up to a 1 month chart. So as you can see here, I'm changing the parameters from a 12-year view we have here to 1 month, and you'll see something very interesting occur. Those lines that I had drawn at the 22 and 24.50 mark are where basically silver is range trading. In fact, we bumped up against the high of about 24.50, and you see silver come right off that line. And that's where we've been trading for the last 24 hours. It hit that previous peak in the chart, and we're going to go back to that 12-year chart, and we're going to see that peak that I drew at 24.50. I drew it right here from a previous peak we saw in July, August timeframe of, 2013. Okay, that's a significant peak before it came back down, and it almost bumped up against it in 16 on sort of maybe a little false rally we had there before range trading. So this was really, these two numbers were really the peak, the 22 and the 24. Were really where I thought we would hit resistance. That's why I drew these lines. This line, and this line. So let's go back and again and look at that month chart. And you can see it's just the psychology of markets. We hit that line and boom, right off the bottom. Right off the bottom. You don't punch through it. Now we did punch through the $22 one. And I think because there's been so much interest in silver, which I'm going to show you has actually increased since 2 weeks ago on the futures markets, that we popped up, and then people are like, whoa, we passed this line. Are we sure we want to pass it? Well, let's kind of sell off a little bit. Oh, yeah, we're going to go try it. We feel confident. We're going past this line. We got momentum, and boom, comes right off of that line. And you see the massive selling today on the markets by the red bar. Once you hit that line, it's like, we're going to take profits. We've had enough. We think silver's risen enough today, and we're going to come back down. So that's the way markets go. They hit previous significant points on a graph, and they either go through, and maybe sometimes you get to that second significant point and the market's like, I'm not really sure if we're ready to do that yet. And it bounces right off. And that's what we've got here. However, I do think the silver trade is in a bull market, and I'm going to show you why. We're going to look at the SLV, which is the iShares Silver Trust. Now that's what people who, or if they have a portfolio and they're not actually buying physical silver, they may put money into the SLV. It's a proxy or a derivative of silver ownership. And the reason I say it's a derivative, and I want to be clear on this video, because based on some comments from my gold video, I think people are misunderstanding what I mean by derivative. When you're trading the SLV, the shareholders by contract have zero claim to the underlying silver that's coming into that fund. The only people that can take the silver out of that fund are the authorized participants. It's the big banks and the contributors of the silver. They can put it in and out. The shareholders cannot get the silver. Therefore, you're not trading actual silver in the SLV. You're trading the price movement of silver as a proxy to the underlying silver in the investment. That's why it's called a derivative product. It's a derivative of the actual investment. This is similar to mortgage-backed securities. If you purchase a mortgage-backed security in the market, you're not actually purchasing the mortgage. You're making an investment into this mortgage-backed security, which is a derivative of the actual mortgage on the home or the piece of real estate that the debt exists. Same thing with the SLV. You're not actually taking physical delivery of the silver. You're investing in the SLV, which is, according to the fund, a price tracking vehicle or a derivative for the actual silver. Okay, now that we have that cleared up, you can see the fund inflows into silver is number 4 on the chart. And this is on ETF.com, which tracks these things. And this is July 24th data, a couple days old, but it's the latest I could find on quick notice. And you see a change, 6.15%, and it reached the top 4. And you also see this in the gold trust. So both gold and silver trusts are getting fund flows into them. People are putting money in there. So I think we're still in a silver bull market. It's pretty clear that people are still wanting to buy silver. And this is very recent data. I also wanted to take a look at the COMEX futures market, because to me, that's really where the price is determined. So on the last video that I showed you, I made a big deal about the delivery port, because these are silver long positions saying, I actually want the metal. So you go to the futures market, you say, I'm going to take a long position in silver. Most of the time you'll settle for cash. If the silver price ends up higher than when you bought it, great, you're in the money, you made profit, settle for cash with the person on the other side that trade. The delivery port is where people have longs are saying, no, I actually want the metal. I'm in this for the actual underlying metal. And you can see how this has exploded in July. Now, the last video I did, we're going to go to a separate report here. This is like a running total for July, was back on July 14th, and I had a 13,919 number. So if we go to the calculator, let me clear this up. We go to a 13,919, and you multiply by 5,000 ounces per contract right here. And we got a total of 69,595,000 ounces. And I said, ooh, that's a big number, because you can see from a trend perspective, it really is. We're now at 4 times what we were in December. Before we were about 3.5. But now we have a total, as of today's date, July 28th, 16,698. So let's go back to calculator. Let's clear it up again. And let's multiply 16,698 times 5,000. And now we get a total of 83 million ounces. That's a change of about 14 million ounces, 13 million something here, million ounces of people standing for delivery. So that's why you saw the number from 2 weeks ago go from 13 something to 16 something of 5,000 ounces each contract. So 83 million ounces stood for delivery. Now, they're issuing a delivery notice. They could settle in cash. The other side of that trade can convince them, hey, if we give you cash, will you take it? So we may not actually get 83 million ounces coming off of COMEX. But the fact that we have that many people right now near the end of the month saying, I want it, and it's been building, as you can see in this report, 165, 245. Since we talked about it, there are 752 the next day contracts, 67, 115, 121, 242, and it all adds up. 469, 450. As we get near the end of the month, more people are saying delivery. We want the silver. That's just fascinating. And so I wanted to look at the most recent. This is basically a daily delivery notice for 7/28, and I wanted to look at issues and stops. Issues and stops are issue is saying we're gonna issue the delivery notice. Stop means we're gonna fulfill it, or we're gonna provide the metal. The stoppers are the ones providing the metal. You can see who has been issuing and who has been stopping. So JP Morgan issued 270 and they've stopped 332. So they're giving up more silver than they're getting. In this case, ABN AMRO is issuing 104, they're only stopping 11. Okay, they're going to get more silver back than they're issuing. Net, they all have to be the same. You have to have the same number of issues and stops on these contracts so that one person says, I want it. The other person says, okay, I'll stop you because I'm the person on the other side of this trade. So for those thinking that JP Morgan is going to go bankrupt, no, because they're getting some silver back. But the fact is they're giving up more than they're getting back, at least on this daily report. But we can see overall in the monthly report, we're expecting 80 something million ounces to come off if everybody stands and they can't be, agreed to settle in cash. And you can settle these contracts in cash. It's a cash liquid market. So we'll see, when the statistics come out, how much metal actually came off. But the fact that we have so much metal, so many longs staying for so much metal delivery is definitely bullish. It's done nothing in the last 2 weeks since I did that original video that you guys saw and got everybody excited. It's done nothing but grow. I mean, it's absolutely just grown. And you can see this number just get bigger and bigger and bigger. It's quadruple what it was in December. It's about, 14, 15 times what it was in January, quadruple what it was in March. At the previous peak in May, it's approaching twice as much. So the trend is, you can look at these numbers. If you were to graph this on a chart, it's like, it's a stair step up. What does a stair step up look like? It looks like a bull market, just like we have in silver. So even though you go to the 1 month chart, we hit this sort of hard line at 2450, which, remember, we'll go back again to the 12-year chart and draw our pretty lines about what were the previous peaks. See this 2450 psychological number. We did bounce off of that here. We came off. But if there's so much going into the silver trust, meaning people want it, and you're seeing more stand for delivery in the futures market, this price is going to rise. So I don't see this $24 line lasting for very long. And the next significant, we could see here, you could see a line right here. In fact, let's add that. Let's annotate this here. You could see a line. We'll put this one in red. How about that? Right here at this previous little, you can see kind of 2 points here. Let's go across. That's going to be about $26 and something. 2 points here, which were previous troughs. Those would have been resistance points on the way down. They can act as a resistance point on the way up. So you could see silver get up to 26 and bounce off again. It depends if people still want the silver. Any of these lines, which were a significant point in the past, especially in this massive bull market and the subsequent drawdown, could be resistance points here. But I think this is the biggest resistance point, and I think that's on the 1 month chart while you see it. I think this will be a minor resistance point on the way up to 32 and then 35. So let's go back to the monthly chart. Oh, let's save these annotations so that they're on our chart. Let's go back to the monthly chart here real quick, and let's see what it looks like. So bang, we bounced off of here, but if we keep going up, maybe we get to, the next level. Oh, by the way, you can see since we've been charting this, you can see the update, some longs are coming back in. So we saw, since we've been talking, the longs are coming in. They're probably anticipating my video and like, no, let's bid silver back up. So it looks like it's going to retry this 2450. Again, you can see that in the derivative market. You can see it there. You can see it here. So like I said, I expected to punch through 24 bucks. Maybe we'll get to that next level. Let's go back to the 12-year chart. Maybe we'll get back to the 26 and meet some resistance, but it looks like we're still in that bull market. Again, we're going to stair step. Just expect silver to stair step. Now, one other thing that I wanted to point out to you guys, this is a different market than gold. Gold had this really nice cup and handle. If you've been watching my videos, I think I just did one yesterday where it had a nice little cup and hand, or it had a nice little cup. And if it formed a handle, that means it's going to come down. It's going to retrace. Retrace means the market has got kind of frothy. People want to take profits. They sell some of their gold, and you see the price come down for a while before resuming its bull market. That's what I think is going to happen in gold. I think it's going to happen right around $2,000, maybe $2,100. In silver, the move has been relatively muted. I mean, it hasn't gone up that much. So I could see it going up more and then coming down. Now, could it come down to the $19 or $18 or the $17 level? 19 is the 50-day moving average you see here in blue. See, blue 50-day. Or the red 200-day moving average, 200-day moving average. Could it come down to 19 or 17 and retrace? Sure. But to do that, you would have to see, this number reverse in the SLV. And you would have to see a lot less people on COMEX wanting to stand for the physical delivery, meaning that the shorts would start to win. If this number came down to like 4,000 next month, then yeah, I could see silver retracing. I don't see it retracing right now. But here's what you want to do. You want to follow the Silver Trust, and you want to follow these CME reports. You just go to cmegroup.com, you look for delivery notices, and you look for open interest reports daily and monthly, and you can follow along if you want. Of course, stay tuned to this channel because I'll continue to do updates every week, every 2 weeks or so as I see stuff happening. But it definitely looks like we're still in the silver bull. Temporary resistance. Last word here, temporary resistance, with the bulls coming back in here, bidding the price back up, and that will continue as long as you continue to see SLV up here, as long as you continue to see these numbers standing for physical delivery, and you continue to see the open interest in the silver futures market that we have. That means people are going to continue to bid it up. So real quick update here. I wanted to give you guys an update on silver because I hadn't done a really sort of in-depth one for a couple of weeks. Hope this helps you out. Happy trading. I look forward to seeing you guys next time. This is Robert Keents from goldsilverpros.com.